Hey guys, welcome back to another video by Fully Informed Trade, or FI Trade for short, knowledge for everyone. My name is Alex Cho, and right now I'm going to be talking about the Euro US dollar currency pair. And right now the Euro US dollar is trying to pierce above that 50-day moving average. It did pull back and closed right below the 50-day moving average before the foreign exchange market closed on Friday. The main reason for the positive move was some sort of deal or agreement that they came up with in Europe. I think this positive move is going to be very temporary, but since it was so explosive in nature, it sent the U.S. dollar index lower. And because the dollar index was so weak, the stock market and the commodity market was able to catch a bid, and a substantial bid at that. Um, But that's besides the point. I'm looking really close at the Euro US dollar. I think that it's most likely going to pull back from these levels. I think the Euro US dollar seems to be well overextended. And I think that people are buying into any type of positive news that's coming from Europe. On the stock side of the equation, not necessarily as much from the commodities, but people are really willing to be buyers when there's good news, and people are willing to. And if there is no positive news, or if there's negative information that comes out, people are willing to sell, but they're not willing to sell as much as they've been willing to. So I guess each bit of economic news that's positive will have more buyers, and each bit of negative news will have less sellers. So keep that in mind when trading the market. But I still believe the Euro US dollar is still in a longer term downtrend. I think there's no real change in the structural flaws in Europe. Um, the interest rate structure on many of these governments are flawed. I mean, no one can really afford the interest, especially not Spain. The other thing that I do want to talk about is not only the interest rate structure that these governments are going through, it's the phases. The first is basic political risk in Europe. Each time political risk unfolds and we have to deal with this political agenda that comes up, there's a huge lack of confidence in buying euros, and that's what causes the Euro US dollar to fall. Liquidity just drops whenever there's political issues, and if there's no liquidity on the euro side of the equation, no one willing to buy the euro, liquidity drops, the value of the euro drops. And since there's no liquidity, the value of the euro continues to drop. Now, once Europe decides to inflate their economy and pull out a 3 trillion euro European Stability Fund, or something to really offset the negative risks entailed in owning European treasuries, then that will be seen as inflationary risk, and that will cause foreign exchange traders to fundamentally sell the Euro US dollar. So no matter which circumstance you walk into, both political and inflationary risk, both will kind of rear their ugly head over the next couple of years, and I still think because of those factors alone, I think the Euro US dollar is in a much longer term downtrend. So keep that in mind when trading the Euro US dollar. I think the Euro US dollar is in a longer term downtrend, and even though you might see positive moves due to positive news, I think those moves or those bounces are very temporary. I think bounces are very temporary in the Euro US dollar market, and I think declines are much more longer term. So overall outlook is negative on the longer term trend. Over the short term, I think the positive news might boost the Euro US dollar for a couple more days, but it's just going to be a matter of months before the Euro US dollar continues to fall. Maybe it might even just take a couple weeks for the Euro US dollar to fall, but I still think the Euro US dollar is in a longer term downtrend. So take care, folks. I hope you guys have a wonderful trading session. Hope you guys make money every single day of the year, and we'll talk some more on Monday.